You guys must be wondering, what am I doing? I'm basically renovating the house, get the walls painted so I can sell this house, eventually invest in the market when it all crashes. So in this video, I want to share you my point of view why holding cash in this 2022 beginning first half is so important. Hi, welcome back to Family Investment. I thought I'd take a wee break so that I can share with you what I've seen on the news, my views on the long-term market, and how we retail investors can invest. So a couple of news first. Two is the banks have done well, but the future forecast seems to be on the struggle. So we thought that interest rate rise, financial and banks will be doing well, but the guidance for the future seems to be a bit lower. Why? Because due to high rising costs, wages, and many other different aspects, which second one is the December retail has come in and it is low. It was lower than last year. And it's quite concerning because the import has gone down, export gone down, import prices have gone up. So things are starting to slow down. So what this indicates is the forecast or the quarter four earnings for e-commerce, for tech stocks might fall. Is this what they're trying to tell us? So banks are coming down, techs are going up temporarily, but future earnings may be low. So that's pretty scary. But hey, today we want to show how retail investors can mitigate through this course. So a couple of things I want to share first. So first and foremost is buying the tech dip is healthy, but be careful. Remember to pick and choose the right tech stocks to buy, as I've shown on this video previously. Second, you need to capture your 2020 and 2021 gains. I know, like myself, I've gone all in, but it's time to take some profit, and my magic number is 25 to 30% cash. If you don't want to sell any of your stocks, then save quicker, save fast, side hustle. And number three, remember, the Federal Reserve is your friend. They're not your enemy. They're giving you as much warning in advance with treasury yield and how they're going to raise the interest rate. They've been as transparent as ever. So they're your friend. Don't hate them. Also, you need to understand that cash is king. Don't do anything drastic. Cash is king. Make sure you hold the cash. Remember, it's a marathon in this race, okay? We've got the whole 2022 year to find the right entry point. Don't rush into it. Do not trust the market just now. I don't trust it. I'm holding back. I'm watching. I'm digesting it. And everyone out there, institution, retail, mega million billionaires, they're waiting for the right yield of entry. Now they're telling us banks might not be having a future growth. And now we have got the retails potentially shopping, decreasing, and potentially we've got Q4 earnings from the tech companies decreasing. So these are all showing very, very negative sentiment news just now. So we cannot trust the market. We just make sure that we got enough cash when the right dip comes in. And if ever there will be a correction, be prepared. Before I go to my important chart, please remember to click and like and subscribe on my channel because I'm trying to help family investors understand the market, steer it, and hopefully help them yield and make money. So share it with your friends and family, help me grow and help your friends as well. And the next thing I want to show this chart, a very important chart. I refer it back each and every time to remind me of the pain. With the correction, it's far more painful than a full recession dip. Why? Because when you see a recession all the way coming down 40%, you are bound to know that you will bounce back out because sideline cash is always there to buy back on the dip. But with correction, it's a marathon. It takes a long time to recover and it plays with your mind. And if you've got no cash, it kills you. So let me show you a chart from 2016, 2017 where I struggled that year and I really done bad in performance. I couldn't buy the dip because I ran out of cash. Hence, I keep telling everybody, cash is king just now. So if you look at this chart here, this chart pains me a lot. There was a double correction over the course of 6 months. I thought that recovery was there. No, it dropped down again. And when it recovered, my mind was telling me, say, Alex, there'll be another crash. Don't trust the market. Guess what? I never bought the market. Only until 6 months later when everything recovered, then I started buying. So the lessons learned here is 1, stay in the market. 2, when it dips down, make sure you have cash to buy the dip. And 3, if it goes up, if you feel uncomfortable, then take profit. It's okay to take profit. And 4, again, stay in the game. Because when you're at that point, you never know it's going to dip or it's going to go up. And when it goes up, you're trying to wait for the dip. You never come back down, and guess what? You missed the boat. So look at this chart, snapshot it. Remember, this might be what we get because that's when the interest rates rise, and this is my lessons learned. And make sure you remember, correction will be a marathon. 2022 will be bullish in my opinion. My forecast is between 12 to 15%. If I want to beat it, I'm looking for 18 to 20%. Okay, I hope you've enjoyed that video, found information useful. Just take our time, no rush, don't rush into the market, buy the dip, but make sure you buy the right stock and make sure you hold lots of cash for potential further long journey ahead. So hope to see you soon. Click like, subscribe, join my Discord channel. I'll reopen it again with the link below. Or if you want more help accessible to my membership, you can always join my Patreon. And that is where I share as much information on my personal ground as possible. Thank you, take care and invest safe.
I hope you enjoyed that video. Check out our website link below. More videos up here. Bye. Bye.